Most people lose money during a market crash because they do the one thing that guarantees financial pain. They panic and sell everything. Here's the truth: the rich don't get shaken when stocks tumble, and neither should you. In fact, some of the best money influencers and investors see a market crash as an opportunity. Keep watching, because the best piece of advice, the one strategy that could protect your wealth for decades, is coming at the end of this video. When headlines scream about stock market chaos, everyday investors feel fear. Fear drives impulsive decisions, and impulsive decisions destroy wealth. Financial influencers with millions of followers, like Graham Stephan, Andrei Jikh, and minority mindset leaders, all agree on one thing: don't let fear control you. Instead, you need a strategy. Let's start with the first tip. Build a strong emergency fund. Money. Influencers repeat this endlessly for a reason. If you have 3 to 6 months of expenses set aside in cash, you won't feel pressured to sell your investments when the market is down. An emergency fund is like your financial parachute. It keeps you calm while others panic. Second, market rewards remember patience. The power of long-term investing. Crashes are temporary. Warren Buffett has. History shows us that. Said it for decades, and money influencers echo it constantly. The stock Every market drop, whether in 2008, 2020, or earlier, eventually recovered and moved higher. Selling in fear locks in losses, while staying invested positions you to ride the recovery. Third, diversification is key. Top personal finance educators stress that you shouldn't put all your money in one stock, one industry, or even one asset class. Spread your money across stocks, bonds, real estate, and even cash. Diversification smooths out the roller coaster, making market turbulence easier to handle. Fourth, influencers often talk about mindset. They know that wealth is as much psychological as it is mathematical. When markets fall, tell yourself, this is a sale. That's exactly what happens. Imagine walking into your favorite store during a crash. Stocks finding go on everything sale. Discounted by 30%. Influencers encourage buying quality companies and index funds when prices are low, because that's how fortunes are built. Now, here's a strategy many overlook: automatic investing. Instead of trying to time the market, set up automatic contributions into index funds or ETFs. Influencers call this dollar cost averaging. By investing the same amount every month, you buy more shares when prices are low and fewer when prices are high. Over time, this lowers your overall cost and helps you stay consistent without the emotional stress. Here's something else the best voices in personal finance emphasize. Ignore the noise. Market news channels thrive on drama. They exaggerate downturns because fear gets clicks. Influencers remind their audiences that reacting to every headline is a recipe for poor results. Instead, focus on fundamentals. Is your portfolio balanced? Is your time horizon long enough? Are you investing in quality? But let's dig even deeper. Hands during the ultra-wealthy and seasoned influencers. Why? Understand that crashes create opportunity. Real wealth often shifts. their shares at bargain prices to investors who remain calm. If you can, flip your mindset and see a crash not as destruction but as a transfer of wealth. You'll put yourself in a position to benefit rather than suffer. Here's a reality check. If you sell in panic, you've lost twice. First, you lock in your losses. Second, you miss the rebound, and rebounds can be explosive. In 2009 and 2020, the biggest stock market gains came right after the worst days. Influencers stress this repeatedly. The cost of missing the recovery is far greater than the pain of enduring the crash. It is. Now, money promised you the most powerful piece of advice at the end. Use a crash as a reset button. Reevaluate your goals, rebalance your portfolio, and double down on your financial education. Don't just ride out the storm. Use it to become a smarter investor. If you can stay disciplined during chaos, you'll be far ahead of the majority. So remember, build your emergency fund, think long-term, diversify. Automate your investing, ignore the noise, and embrace the opportunity hidden inside every crash. The market will always have ups and downs. But with the right mindset and strategy, you can turn fear into fortune. Please like and subscribe for more financial information. This communication does not constitute financial advice. Investments are subject to market risks and may decrease as well as increase in value. You should conduct your own due diligence and consult with a qualified financial advisor before making any investment decisions.